Now, the fourth step that we were discussing is known as absorption. Okay, you already know that when we are supposed to do accounting for overheads, so the very first step is allocation. The second step is apportionment, and the third step is reapportionment, and the fourth step is absorption. In reapportionment, we have further three steps. That is direct method, step down method, and the last one, reciprocal method. Now, in this lecture, we will be discussing about absorption and absorption costing. Now, what is absorption? Absorption means to absorb overhead cost into the cost of production of an, or we can say into the cost of product. So at absorption level, this is the last stage of overhead accounting. And in this, we basically do is that we allocate, or you can say that distribute the cost of a production department into the cost of product. Because until now, we have understood that all the cost will directly or indirectly be given to production cost, either by apportionment or reapportionment or allocation. The production cost centers will be responsible for all the costs because they are the departments that are making the product. So when the cost is distributed among all the production cost centers, we then need to charge this cost to products, because ultimately production cost centers are those departments that are producing those products. So this means whatever the cost that we are going to give to production cost centers will actually be arising due to the products. So that is why what we do in the very last stage, that the cost will be given to products, we need to identify. So we need to identify that how much each, or we can say how much of the cost each product should get regarding overheads. So for example, let's say that our overheads to production cost center were 10,000. We need to calculate that how much of this 10,000 will be given to each product. So what we do, we calculate OAR. What is OAR? OAR means overhead absorption rate. Overhead absorption rate simply means that this is the amount that is going to be added in the cost of a product. Overhead absorption rate are always calculated by budgeted results. Budgeted overhead cost, or simply budgeted overhead, divided by budgeted activity. So what you need to do is you just need to divide budgeted overheads by budgeted activity, where this budgeted activity can be either number of units, it can be labor hours, and number three, it can be machine hours. So in order to calculate the amount of overheads given to each product, we calculate OAR, that is overhead absorption rate. And overhead absorption rate tells you that this is the amount of overhead that each product is going to get. Now, overhead absorption rate is calculated via the formula that says budgeted overheads divided by budgeted activity. Budgeted activity is the work that is consuming these overheads, due to which these overheads are being cost. So budgeted activity is can be the units that department is producing. It can be the labor force that is working in that department, or it can be the machine hours that are being applied by, or that are being used with the machines to work and produce the units. So these three are the major budgeted activities that we use in order to calculate overhead rate. For example, if we use the units as the budgeted activity, so the answer will be in dollars per unit. If we use labor hours, so the OAR answer will be in dollar per labor hour. And if we use machine hours, then that will be labor dollar per machine hours. So for instance, if I am given an answer that says a $50 per machine hour, that means that if machine is going to work 1 hour, this is going to result a $50 in overhead cost. Similarly, if it's $50 per labor hour, means that one labor hour working will be causing $50 cost for the business, and same goes with the per unit as well. Now, let's proceed ahead and let's see that how this OAR actually works. But always remember before that OAR is always calculated for budgeted results, budgeted data. But if in case in any question you are not given the budgeted data, then in that case you can use actual result. Remember, budget OAR is also known as predetermined overhead absorption rate. And why it is known as predetermined overhead absorption rate? Because it is based on budgeted results. If if OAR is based on actual results, then it is going to be known as actual OAR. Each department.
So what do you mean by actual results and actual OAR?
Okay, actual results mean like the actual data, that you get at the end of the year. When you are using that data to calculate the OAR, so that will be your actual OAR. But if you're using, yes,
So if you use so if you use the budgeted overheads and activity.
sorry, if the budgeted overheads,
So when you use this formula, you get your OAR, and then if you multiply it by the actual time, like actual activity, then you get your actual results.
no, that are absorbed results. Okay, I will tell you that as well, but those are absorbed results. I'm just telling you here at the
Okay.
moment, if you're using your actual results, okay, then that is known as actual OAR. Okay, that is calculated at the end
Okay.
of the year. If you're using your budgeted results at the start of the year, that will be known as budgeted OAR or predetermined OAR. Okay. Now I
Okay.
was telling you that each department can calculate separate OAR, like they can calculate their own OARs. Okay. But if one OAR is being calculated for all the departments, then it is known as blanket OAR. So what is blanket OAR? Blanket OAR is when all the departments, all the production departments are using one single OAR. It will not change from department to department. Then that OAR is known as blanket OAR. It is the same as OAR. The name is only different. That blanket OAR will be when all the departments will be using the same OAR, and If they're using different OERs, then that will be departmental OERs. Okay. Now, if I give you a basic example in order to calculate OER, so let's say budgeted activity in this case is machine hours, and let's say machine hours are 400, right? Now, if we calculate the OAR here, the very first step will be OAR calculation. Now, I want you to please work this on your calculator and tell me the answer of calculating the OAR.
Sorry, sir.
I'm saying that please calculate this OAR on your calculator and let me know the answer.
Okay. 25.
$25. Okay. So I will write it as $25 per machine hours, right?
Yeah.
Now, after this OAR is calculated or job is done, we will be knowing that, okay, if we are making one product, then the amount of the overhead cost that is going into the product cost will be $25, right? This was our budgeted result. But what happened when the year ended and you get the actual result? You assumed, you budgeted that in the entire year you will be having $10,000 of the cost for 400 machine hours. That makes that each machine hour will cost you $25. But in reality, at the year end, when you got the actual results, so you came to know that your actual overheads were 2,000 more than the budgeted, and they were in reality 12,000. Okay. And in
Okay.
reality, your actual machine hours were not 400, but they were actually just 350. I'm repeating again. In the start of the year, you assume that your budget, your overheads that were supposed to be incurred will be 10,000 for 400 machine hours, making it $25 per machine hour. But in reality, when the year ended, you got the results and you just saw that actual results were actually $12,000 for 350 machine hours. Now there is a discrepancy in your budgets and your actual results. You need to compare, was it good or was it bad? If you see the cost, you will straight away said, no, sir, it is bad. Why? Because we assume the 10,000 should be incurred, but 12 has been incurred, right? It is bad. But if I tell you that, see, it is good because we assume that 400 machine hours will be worked, but 350 have been worked only. It is good, right? So there is a dilemma here.
Yeah.
We need to understand
Yeah.
and or we need to calculate the real basis. So what we do is,
So do we divide it?
yes, please go on.
12,000 divided by 350.
4,000 divided by, sorry, I didn't get that.
No, 12,000. 120,000 divided by 350.
Okay. So you are saying that we will divide this 12,000 divided by 350. So actual OAR is getting me to $34, right? So which means that, see, I assume the 25 is going to be added in my product spot, but here the answer is 34, right? So there are discrepancies in my calculation and in my result. So what I am going to do, I'm going to calculate, I'm going to see that how much my budgeted results are different from my actual results. I am going to use a three-step approach in which what I do is I number one calculate OAR. Okay. Then in the second step, I calculate absorbed overhead. What are
Okay.
absorbed overheads? You have said that 25 per dollar will, 25 per hour will be applicable, right? You said that if machines will be working per hour, so $25 will be incurred. How much machines have worked in reality? They have worked 350 hours, right? So if you say that 25 hour will be the per hour cost and machines have worked 350 hours the entire year, so how much the cost should be? So I will just calculate it. 8750, right?
Yeah.
You said in the start of the year that if machines are working per hour, a per hour machine will be costing you $25. And in reality, machine have worked 350 hours. This means that the cost should be 8750. This means that the actual overheads that I will be getting should be 8750. My actual overheads are $12,000. So what are absorbed overheads? Absorbed overheads simply means that if you follow your budgeted OAR, then how much shall the cost, or you can say shall the overheads 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 be when you apply the actual activity. So this means that our actual activity should have costed us only 8750. That were the absorbed overhead, but actual overheads are 12,000. So the third step is we
Yeah.
calculate the difference. Difference between what? Difference between your actual overheads and absorbed overhead. Remember, it is actual overhead minus absorbed overheads. Actual overheads were 12,000 minus how much was the absorbed? 8750. What is the answer? 12,000 minus 8750. 3250,
12,000.
right? What does this
Yeah.
okay? What does this mean? This mean that the expense was 12,000, but you have just recorded 8750, right? The actual expense was 12,000, but you just assumed that it will be 8750. What you did, you basically under absorbed. What you did? You did under absorption. You under absorbed the overheads because the absorbed overheads were just 8750. In reality, the answers was 12,000. So you under absorbed your overheads by 3250, which means that your profit, which means that your profit is higher than how much? Higher than 325. Sorry. Your profit is higher. We can write it like your profit will be higher from 3250. So we will subtract or deduct the $3250 from profit to reduce it. Because as we did under absorption,
Oh,
we
okay.
underestimated our expenses. Under absorption means underestimate. We under we did under absorption.
So, under and over absorption always confuses me. I always forget it for some reason.
No problem. I'm going to tell you
I
the
feel like
and
it's the
you will not
opposite way.
forget it from now on. But okay, I'm going to tell you the trick as well. So,
Okay.
see, under absorption means underestimation, right? You underestimated You underestimated the expense. You just recorded 8750, but results were 12,000. This means that your profit is higher than 3250. 3250 is still in your profit. You need to reduce that. So your profit, so under absorption is actually deducted from the uh, profit. If the scenario was
Okay, so
changed, if the scenario was the other way around, 8750 were your actual overheads and 12,000 were your absorbed overheads. So the answer would have been
yeah,
negative 3250, right? This means that you have over
yeah,
absorbed. You thought that the expense will be 12,000, but in reality the expense was just 8750. So this means that you have over absorbed, or this will be known as over absorption. And over absorption means overestimation. So your profit will be lower by 3250. So add back 3250 into your profit. Okay.
okay,
There is a trick to remember, and trick to remember is the word nopu. This is a word nopu
okay.
that you need to remember. And it says that if your answer is negative, this means it is over absorption.
Oh, okay.
And if it is
Yeah,
positive, it is under absorption. NO negative over. PU positive under. Okay. So if you remember this trick,
okay.
you will be never confused in the signs that, okay, positive or negative, is it over, is it under? So remember, if it is under absorption, it will be minus.
And sir,
Yes. Yes, please.
do we always have to do actual overheads minus
If if you change the
absorbed
formula,
overheads, like budgeted ones?
if you change the formula as absorbed minus actual, then this will become PONU. Let me tell you
Okay,
that if you change, yes, for this NOPU, you need to keep the formula same. If you will change the formula, then it will be opposite. It will become PONU. PONU. It will become PONU, right? So in
yeah,
order to remember this trick, you always remember that the difference shall be calculated by actual overheads minus absorbed overheads. Okay. So it shall always be actual overheads minus
okay,
absorbed overheads. Then you will be able to use this trick. Then you will be able to get answers. Are you clear on this?
yeah,
Perfect. So in FMA, this section, the section that is presented right in front of you, this basic example, this is also very important one in FMA in terms of calculation. There is no theory in it, right? The theory is only that what is under absorption, it will be added or deducted, or over will be added or deducted. Other than that, it is all the practical part, right? So you need to make sure that you remember these three steps: OAR calculation, absorbed overhead calculation, and the difference calculation. You can get two types of questions.
okay,
You will be getting two types of question in exam: top to bottom approach. This approach means the same that I just did in front of you. I started calculations from OAR and I went all the way to over under absorption. This is top to bottom approach. The second type of questions will be bottom to top approach. You will be given over under absorption. You will be asked to calculate either budgeted activity, either budgeted overheads, or either OAR. So you need to first of all adjust for over under absorption, right? And then you have to go from bottom to top. So there will be two types of question in the exam. Okay. You need to practice these two types of questions. Top to bottom questions are very easy. This is like just a straightforward thing. But in bottom to top approach, what is the major issue? The major issue is students get confused that, okay, if I'm given under absorption, will it be added or will it be subtracted? Right? So see, if you are given under absorption, okay, and you are not given absorbed overheads, let's say, if you are given under absorption and you are not given absorbed overheads, so you need to find absorbed overheads. You need to think in mind that under absorption means that your expense was not that much,
Okay.
but sorry, under absorption mean that you have recorded less expense, right? Under absorption means that you have recorded less expense, but the real expense was higher. So recorded less expense mean that if we deduct 12,000, if we deduct 3250 from 12,000, then we will get 8750. So remember, I'm writing here it as well. You can also write it with yourself. Number one, under absorption will be deducted from actual overheads to get absorbed. Okay. Number two, under absorption will be added to absorbed to get. So you have to write these four lines with yourself so you can remember this in the bottom to top approach. Okay, this is a very easy stage where students get confused and they easily lose 2 marks. Over absorption will be added to actual overhead to get absorbed. And number four, over absorption will be will be deducted from absorb to get actual. Okay, so whenever you are doing bottom to top approach, remember these four sentences. They are very easy. The only way to master them is that you have to do the practical questions. Okay, first of all, always do the top to bottom approach questions. Once you're done with that, then you're given a lot of questions in your exam kit and on your study hub as well that relate to bottom to top approach because they are the major section here, right? So make sure that you work on that and you know how to calculate OAR in the bottom approach or how to calculate absorbed in the bottom approach because this is the important section here. Okay.
Okay.
Now, with this basically comes to an end to our chapter accounting for overheads. And we will now be directly moving towards the new chapter that is known as absorption and marginal costing. So
Okay.
we will be starting with marginal costing. You need to remember that the marginal and absorption costing is the entirely same chapter that was discussed back in MA1 and MA2 as well. Okay, so there is nothing new in this chapter. Same formulas, the same explanation will be having here as well. So I'm going to explain you the marginal costing today, and tomorrow we will be working on absorption costing, profit reconciliation formula, and we will also be starting the new chapter as well. Okay, marginal costing. Can you tell me what is the word marginal mean? Do you know what is the meaning of the word margin?
Um, so it's sales revenue minus contribution, and marginal costing is good for making uh it's good for making long-term decisions.
Okay, now let me tell you. Marginal means cost of making one extra unit. If you're making 100 unit uh, costing $100, what will be the cost of making one extra unit? If you're making 100, what will be the cost of 101 unit? So that one extra unit that you are going to make, the cost of that extra unit is known as marginal. Marginal costing, this is a theory portion, okay? You need to remember these points, is known as variable costing. Why?
Wait,
Cost of,
sir,
yes,
how does marginal costing mean making one extra unit? I don't understand that part.
the word marginal, right? I'm explaining you this. The word marginal means that how much margin you are going to have when you are making one extra unit. For instance, let's say that if you are making 100, if you're making 100 units, right? And 100 units are costing you $100, what will be the cost of one making one extra unit? So obviously that will be $1, right? Because 100 units, $100 cost means $1 per unit. So that $1 is going to add up every time when you are making one extra unit. There will be a change of $1 in your profit every time when you make up a new unit. So this $1 is the margin by which your profit is going to change. This $1 is the margin by which your cost is going to change when you make one extra. Got it?
Okay. Yeah.
Marginal costing is known as variable costing because you have already understood very clearly in the cost classification chapter that prime cost is the cost that is associated in making a product. Prime cost mean direct material, direct labor, and direct expense, right? So the
Yeah.
prime cost is actually your variable cost. These are all your variable in by behavior, right? So marginal costing is also known as variable costing because it only incorporate variable cost into the cost of production, because it only incorporate incorporate the variable cost into the cost of production of what? Of inventory. This is an important line. Fixed cost is always treated as a period cost. What does the word period cost mean? Period cost means the cost that is associated with a time. That is not activity dependent, but it is time dependent. It will remain constant for a specific time period and then it is going to change.
Okay.
Then, uh, now when I talk about fixed cost, that will include fixed production and non-production. Okay, both of the costs. Marginal costing is based on the concept of contribution. Contribution means how much your product will contribute in your profit. So contribution means from the sale value of that product, just minus all variable cost of that product. You are selling one item for $10. You are making that item for $5. 10 minus 5, $5 is the contribution. That one product will contribute $5 towards your profit. All variable cost, when I say all variable cost, remember it is going to be direct material, it is going to be direct labor, it is going to be direct expense, it is going to be variable production overheads, and it is going to be variable non-production overhead. There is a very big misconception and there is a very big a loop between students understanding. What they do is whenever they are given a question for calculating contribution, they do not deduct variable non-production overheads because they are of the view that non-production cost is not included in marginal costing. This is wrong. Okay. Always there are two things.
Okay.
Number one, whenever you are going to calculate contribution per unit, whenever you are going to calculate contribution per unit, or simply when you are going to calculate contribution, just contribution, you should always deduct or you should always include variable non-production overhead in your variable cost, right?
Okay.
Number two, when you are making marginal statement of profit and loss, I'm repeating, when you are making marginal statement of profit and loss, then variable non-production overhead cost is not included in the cost of sales, but is deducted separately. I will also tell you this in the pictorial form as well, but currently just listen that when you are making marginal costing statement of profit and loss, variable non-production overhead is shown separately from cost of sales. It is not included in cost of sales. So from that perspective, students think that it might not be included in contribution. Wrong, it is included. Okay. So let me show you how this basically is going to work. Meeting is going to end. Please rejoin this link once the meeting ends. Okay.
Okay.
Meanwhile, you will be joining again. I'm making the marginal profit and loss statement.
Okay. So, I feel like I understand the concept. It's just the questions are really hard for this topic.
Okay. Okay. Uh, uh, in that case, I will suggest, let me give you a free hand here. Uh, Take out this day, the remaining day. Okay. I have given you a bit of concept